Think Realty Nation, welcome to the Think Realty Podcast. It's your host, Abhi. Excited to be here today. Why? Because we get to talk about turnkey real estate investing. More specifically, we're talking about turnkey real estate investing out of state. And the one man that I know that can talk about this at length for hours, because I've sat next to him at length for hours, talking about this very specific topic, is Marco Santarelli. The one, the only Marco Santarelli. He's a really good friend of mine. I like poking fun at him, and then he'll dish it back to me, which is awesome. Great time. And he's also the founder and CEO of Norada Real Estate Investments, which is also today's sponsor. So this entire podcast is brought to you by Norada Real Estate Investments, your premier source for cash flow investment property. Please visit them at www.turnkeyrealestateinvestments.com. So we're going to talk to Marco about investing long distance and out of state, because that's a really important topic, especially as we real estate investors were running out of opportunity, right? Yes. Well, no, not if you invest out of state. So we'll talk about that. And then we'll offer 7 tips to be successful as a multifamily investor. So you're going to get all the good stuff on the single family side right now. And then if you have some questions about multifamily, there's 7 things that you can do to be more successful in the multifamily game. Welcome to the show.
I said it's great to be back on. I hope everything's been going well.
Everything's great. So I know you, we know each other, but there are some folks that don't know who you are. Give us a little intro on who are you and what do you do?
Yeah, so I'm a real estate entrepreneur, real estate investor, author, speaker at times, and I love what I do. Our goal is to help 1 million people create passive income and wealth through real estate by providing them the knowledge, the resources, and the properties that they need to build a portfolio and achieve financial freedom.
So the single family space is a very popular space for real estate investors to start out in. And many of them, like me, have absolutely zero interest in doing renovations. I hate renovation work. There are a lot of people that are passionate about renovation work. I have a passionate hatred toward renovation work. So turnkey real estate investing is a really good option for people like me that are interested in buying a piece of real estate that is already rehabbed and rent ready. It may have a tenant in it by the time I buy it, or it may not, depends, but then I work with my property management company, get it filled, etc. A lot of investors, though, are scared, fearful of investing out of state, though, even though they know that's where their deals are. And I know we could talk about this for hours, and we have before. Where do you want to start on that topic? Because it's scary for people, and I mean, you also host your own very awesome podcast, which I want you to plug in a second. But I want you to have the floor and kind of kick us off on, should we be fearful of investing out of state?
You should not be fearful. First of all, to a previous comment you made, there's really 2 types of investors. You've got your active real estate investors, and then you've got your passive real estate investors. Most investors want to be in the passive camp, meaning that they have capital, they invest it, they get a return, they grow their wealth, they grow their passive income. They do that immediately, and they can do that over time. The people who are in the active camp are the people who love to find and fix distressed properties, turn something ugly into something pretty or beautiful. And there's nothing wrong with that. It's just a different way to invest. One being a business, the business of fixing, flipping, fixing and renovating homes. The other is really more of an investment mindset, investment perspective, that you're putting your capital to work, generating income and creating wealth over time. But the reality is this, and this is to your latter question. A lot of us live in expensive markets, and maybe they weren't at one time when we first moved to that market or while we were growing up in a market, but over time, these markets become more and more expensive. And what happens is the numbers don't make sense. Me being here in Southern California, it's really hard to find good quality investment property that's affordable. It's almost like a unicorn. You can't find it. And if you find a good deal, odds are that the numbers still don't pan out as well as they do in other markets. So the problem is a lot of us live in these expensive markets where deals are hard to find. And if you can find deals, the numbers don't pencil out as well as they do in other good markets. So what's the solution? The solution is to invest in the best markets that produce the best returns. So the U.S. is made up of over 400 metropolitan statistical areas. The fact that you live in one of them doesn't necessarily mean that that's where you should invest. You have to open up your mind and realize that we live in a big country. So put your money to work in the markets where you're going to get the best returns. And this is obviously what we do day in, day out. It's what we do personally and as a business. But your audience needs to understand that if you live in Denver or the coastal markets like New York, New Jersey, California, Washington, whatever, you maybe have a hard time, maybe an impossible time finding a good deal in your backyard.
I feel like for the last maybe, you and I have talked on air together. We've done this podcast together many times now, and I've known you for many years now. Over the last many years, if there's one thing that consistently rings true with our conversations, it's that the expensive cities and states, Washington, you've got California, obviously. If you live in Chicago, these are really expensive markets. New York, even Boston. If you're going to invest in these cities and states, then it kind of makes sense to look at other states and look at other cities for a higher yield and more bang for your buck, while also deploying less money. Marco, you live in California. I mean, you know how much it costs to buy, fix, and flip a property in your neck of the woods. I mean, it can be millions of dollars sometimes. But I also get your emails, and in your emails, it gives me a very good analysis of new up-and-coming markets and what I should be looking for and what I shouldn't be looking for. It helps me to make a decision whether or not to enter that market. And when I do, I invest less money and I see a bigger return. Why aren't people doing this? And you and I have been talking about this everywhere on every social platform for years.
Yeah, I almost want to say the smarter people are doing this. And I mean, they are smart people for recognizing that they can do better in terms of building their real estate portfolio and generating returns in these other markets. But it's really just a matter of education and in some cases, pure ignorance. I mean, I don't say that to be negative. It's just the fact that a lot of people are not aware. They're either falsely led to believe that they should invest in their local market, and because it makes more sense there, or they're just not aware that they can actually do better in other markets. So when you focus on markets that it's not just affordability, but the fact that you actually can invest in rental properties, whether they're single family homes, duplexes, fourplexes, in good neighborhoods, stable neighborhoods where you have a good tenant pool to draw from, and you can generate positive cash flow, and you've got stability in that neighborhood and in that market because you've got the job growth, you have population growth, you have migration of people coming in because of the jobs. You have a diverse job market, meaning the economy there is broad. So you have all these things that are essentially minimizing your risk. In other words, they're providing a very strong foundation to build off of. When you're there and you can buy properties that fit your investment criteria, if you don't know what that is, that's something we can certainly help you with. But they meet your investment criteria. They're generating positive cash flow. You're getting a rate of return immediately. So every year you've got a return on your invested capital, and then as the years go by, you have equity growth because you're amortizing the loan and you're generating appreciation through just the growth in that market. That's adding to your net worth, so your wealth is increasing. These are all positive things. Then you have the tax benefits of real estate, which is the depreciation that the IRS allows you to take, which helps shield all your passive income, most or if not all your passive income. And the fact that you could leverage your capital and it goes much further in other markets. So for me here in California, if I want to buy, let's say, an $800,000 single family home in a good neighborhood, and that's not an unreasonable number, 20% down is $160,000. Well, what if I took my $160,000, and this is true for anybody listening to this, not just me, but like, what if you took that $160,000 and you turn that into 6, 7, or maybe even 8 3-bedroom single family homes in other markets like Memphis or Indianapolis or Chicago or these other markets that we operate in. And now you've got cash flow coming in from, 5, 6, 7, 8 different properties. You've diversified yourself a little bit geographically because you have multiple properties. You have more in terms of depreciation that you're spreading across different properties, and you have greater appreciation potential. And you're also in more stable markets. They're not cyclical like the California market is. They still appreciate, but they appreciate a little bit more with a smooth growth curve as opposed to a growth curve that looks like a roller coaster as we see in the coastal markets. So for all these reasons and others, this is why it makes so much more sense to pick markets that actually make a lot of sense fundamentally and economically right from the get-go, instead of just being locked in to this false belief that the best deals are within a 1-mile radius of where you live or a 2-mile radius, because that's not always true.
Yeah, that's totally fair. I mean, from a market-to-market perspective, I live in Atlanta. I'm looking outside. I'm actively seeking rentals outside of Atlanta. You can attest to California. Like you said, the average is roughly 800 and X thousands of dollars. That's a heck of a. Do you know how many properties you could buy in Indianapolis for that? Like, far too many. Like, you can buy an entire portfolio if you were putting down $800,000. Let me just jump on a quick calculator here. If if $800,000 represented, say, how much would you? That would be like what, 20% down? You could buy a $4 million portfolio with that amount of money. It's insane. What are some of the things that, if I'm stepping into an out-of-state market, what are some of the things I need to start paying attention to? And how do I build my team out of state? Because that can also be time-consuming, right?
Well, team is critically important. You obviously want your acquisitions people, whether it's a real estate agent, broker, a turnkey property provider, a wholesaler if you're an active real estate investor, whatever it is, you need a deal flow. You need to have the deals come to you.
Yeah.
Then you need a professional full service property management company. You'll want obviously a title company, an inspector. These are people that you use on a transactional basis, an asset protection attorney, a tax advisor or CPA. And obviously your lending sources, people who are going to provide you the financing for each and every transaction, or when you do a refi. That's your team. That's your core team that you put together. But in terms of what to look for, I mean, that's a big question, long answer. But if I had to kind of summarize it, as far as the market is concerned, you want a stable, not a volatile market. It's what I call linear and cyclical markets, but most people just understand them as being stable versus a volatile market like what we have in coastal California as one example. Diverse metropolitan areas, you want a diverse job market. You want a broad economy. You don't want it to be all based on oil and gas or steel or automotive, that kind of stuff. So that stability adds a lot to the base that you're investing in. At a very high level, a quick metric I use is rent to price or rent to value ratios.
Okay.
So the quick and dirty example I use is $100,000 property should rent for about $1,000 a month. Now it's okay if it's renting for $900 or $800 or even $1,100, but being around that 1% tells you what is possible in general terms at the market level. But when you're actually looking at a property, that's one of the quick litmus tests or metrics I look at. And I don't base my decision on that. It's just the first thing I look at that tells me, continue to ask questions, look deeper into it. But the same is true for the market. You could apply that at the market level. And last but not least, a landlord-friendly environment, like whether it's Georgia or Alabama or wherever it may be, you want the laws to favor the landlord, as opposed to the tenant. So those are the 4 key things in selecting a market that we look for right from the get-go at a high level.
I think that's gold, and I think every investor needs to continue to understand that and continue to apply those 4 principles to their investing strategy on a very regular basis, especially for single-family rentals. All right, there's nothing worse than going wrong in an initial set of assumptions, and then coming crying back to us later saying, "Oh well, I should have done this the right way in the beginning." Well, yeah, genius. Like, you should have paid attention. But that's part of listening to the podcast. It's part of getting in touch with Marco Santarelli over at Norada Real Estate Investments. You can check them out again at turnkeyrealestateinvestments.com. A wealth of information on markets, a wealth of information on strategy, and just a super, super cool team. You got to meet them, and they're really knowledgeable of what's going on and directing you to the right property managers. I mean, I've been working with Marco for a while. I've spoken with his team. I was interested in Birmingham. They connected me to a local person that had local market knowledge, that understood it. I visited. I shook their hands, supremely knowledgeable about the market. And I said, hey, you know what? I want to know who's good, who's not, what I should pay attention to, any red flags in the market. And I got all of them. So, that's a very, very big testament to Marco and his team for having the right people involved. And I think that's really cool. So, Marco, thanks for everything that you do. I'm going to keep in touch, obviously. And I'm going to Italy next week. So I need some recommendations at some point. So I'll shoot you a text.
I'll hook you up.
That'd be awesome. But listen, thanks so much. I know you've got to fly. I've got to fly. And for those that want to get in touch with Marco, how do we do it?
Just go to our website, noradarealestate.com, Norada, noradarealestate.com, or the sister website where is the home of our podcast, and that's passiverealestateinvesting.com.
Awesome. Sounds good. Marco, thanks for your time. I won't keep you any longer. Appreciate it.
Thank you, Abhi. Appreciate it.
You got it. The next segment is brought to you by Real Property Management, which is the largest residential property management franchise in North America, managing tens of thousands of properties for individuals, investors, and institutions throughout the country. Learn more at realpropertymgt.com or call 888-806-7088. So I'm going to take just a minute and kind of summarize this article by D.C. Fawcett on Forbes where he talks about the 7 tips for successful multifamily investment. For those of you that are like, okay, you know what, I have enough of maybe a single-family rental portfolio, even though I don't think you can ever have enough single-family rentals, and you're looking at multifamily, well, then let's take a look at a couple tips. All right, it doesn't hurt. Let's rock through these real quick. Number one, you want to choose your location carefully. Marco and I just talked about it. I mean, there are 400 metro areas in the United States. You want to make sure that you are paying attention to the market that makes sense for you. You want to go to that market, you want to study it, and you want to conduct the right amount of due diligence. Are they adding jobs? Are people moving in? Are they moving out? Crime, etc., education. This stuff matters. So understand those factors and key those factors into your overall strategy. Number 2, you want to set a budget. This also works for single-family rentals, quite frankly, right? Like, you don't want to have an unlimited budget. You want to be very specific on what you're doing with your money. Number 3, you want to start small. Buy maybe a 2-unit, 3-unit, 4-unit, and then go from there. So you don't have to jump into your 150 units right away. Number 4, you want to work with qualified real estate professionals. At the end of the day, if you don't have the experience, you need somebody that does. A qualified real estate professional, like an agent or a broker in the multifamily world, can help you out. Number 5, you want to determine the best rental rate for your property. When you're buying a property, you want to know what the top line is and where you're coming in and how much of that value you can force by making improvements. Number 6, expect the unexpected. As in single family, crap is going to happen, right? Crap is my 4-letter word that I can replace for the other 4-letter word. So expect the unexpected. Number 7, make improvements. You always want to keep making improvements, especially on your investing strategy. Obviously, the property itself, you want to improve the property, and more specifically, on yourself. So, Think Realty Nation, that's a wrap. And I'll tell you, I mean, Marco's such a good guy, and Norada's, the entire team over there is so awesome. And this podcast wouldn't have been possible without their support. So this podcast is brought to you by Norada Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateinvestments.com. Think Realty Nation, got questions? Get in touch. Go to thinkrealty.com. Find me anywhere online at Abhi Golhar. And until next time, happy investing.